FM. Sorry. It's 8:37. Hey, Philip's on the line. Let's all go to Statler Financial Services in Sebring. Good morning, Philip. How you doing?
Hey, good morning, Scotty. Doing well today. I wish that we could say the same was the same for the markets yesterday because, we kind of had a down day, but not unexpectedly based on what we saw yesterday in the CPI, the Consumer Price Index, being a lot more than expected. And then on top of that, we're coming off of, again, setting new record highs on Monday. So again, not really unexpected that we would see some downturn. The thing's going to be, can we continue tomorrow and today as to what that really looks like? So we closed out yesterday, just to kind of bring you up to speed. The Dow was down about 30 basis points, almost 1/3%. Still pretty high at 34,888. NASDAQ was down almost 0.4%, down almost $56 to 14,677. And then the S&P 500 down about 1/3%, also down to 4369. So everything was in the red yesterday, except for oil. Just to give you a heads up, oil closed up over 75 yesterday, Scotty. So
wow. Okay.
Yeah, you might want to fill up your gas tank today.
Today's the day. All right. Good advice. Always good advice from Phil. Yeah.
So that was yesterday. And the question is, what's going to happen today? We'll have to wait and see. We still have some more numbers coming out. But before I go into numbers, I just, Dave's always good about bringing out just little tidbit things that he finds. And I found this headline kind of interesting. And you may too. Texas governor to arrest the Democratic lawmakers who fled the state on a private jet to block voting rights bill.
Yeah, I heard a little bit about that. Yeah, isn't that something? Wow.
It'd be interesting to see how that all works out. So, but
these are interesting times, Philip. Very
definitely interesting times we live in, doesn't it? So we did have one more macro thing come out this morning. And that's going to be the producer price index. Yesterday we had the consumer price index. That's how much you and I are paying more now than what we were paying last month or last year. And it was an unpleasant surprise up more than expected, substantially more than expected. Well, we're seeing the same thing, Scotty, in the producer price index. That's how much our people that we buy things from, how much their increased cost of production is. Apple has to pay more. General Electric has to pay more. Duke Energy has to pay more for their stuff that they're buying.
Right.
And that's what this number kind of takes into consideration. So they expected about a 0.6 of a decline. An increase in the producer price index. There's actually a 1% increase in the producer price index. And the other thing about that is that the year-over-year number was something to really look at. It was up 7.3% from last year compared to I think it was 6.6% they were expecting as far as a 12-month increase in the producer price index. So again, just like we talked about yesterday, the consumer price index was the highest increases we've seen since 2008. This was a big increase. I didn't get a chance to see how far back this is, but that's a substantial increase over what we've seen in past years. So again, giving us some indication that we've definitely got some inflation. The question is going to be, where's it going to round out at? What's that number going to be at the end of the year? And what impact does that continue to have on our markets going forward? Oil, gold, silver, and then the indexes as a whole. And so we look at those things. We did have a couple earnings come out. Again, this first really full week of earnings, we always have the banking industry start to report. And we had another one. We had Bank of America report. And I got to say, Scotty, it was a little bit of a disappointment.
Really?
Yep. They were expected to to come in at 77 cents. They came in at $1.03, which sounds better, right? But there
Right.
were some other issues coming in there that that affected it. So the bank's revenue came in below what was forecasted. They
Okay.
had higher expenses than what were expected. So Bank of America is getting hit this morning, down 1.8% after closing down almost 2% yesterday. So we're getting close to a 4% swing in the price of Bank of America right now. Then in that same vein, we had BlackRock. They're not a bank, but they're an investment firm, asset management firm. They had a pretty good quarter. They beat by about 55 cents a share. Revenue was above forecast. Their assets under management hit a record of almost $9.5 trillion during this last quarter.
Okay.
But even though it's one of those things that Dave and I talk about often, is you just don't know what's causing the market or individual stock prices to do what they're doing, because even though that looks like a lot of good news, BlackRock is not doing well this morning. They're down 2.5%.
Really?
So even though they had some good numbers and everything looked well for them, you don't know if it's profit taking or something that's inside the report that we haven't seen, that hasn't been threshed out yet. But that's one of those things. And so the last one I have for you this morning is Delta Airlines. So now we're starting to look at some of the travel industry.
Okay. How are the airlines doing? That's a big deal because they sure took it on the chin here this last year, right?
Yeah, they really have. Now, I did see a report this morning when I was watching the news that they've managed, airline prices, ticket prices are up about 7% from where they were about a year ago. So I guess that's some good news, at least for the airlines. It's not good news for you and me that want to take off and
Yeah.
fly somewhere.
Yeah.
But Delta lost money, which you kind of expect with the pandemic. Not as much
Right.
as was expected, though. They were expected to lose like $1.38 a share. They only lost $1.07 a share. So in terms of looking, that's good news for them. They didn't lose as much as expected. Revenue was ahead of forecast, so that was good too. They're seeing solid demand for flying right now, which is also good news. And they're up about 1.8% this morning before the market gets going. So kind of a mixed bag when we look at those things. Now, yesterday I did see one of the Fed presidents come out and say that they may start scaling back on their bond purchases between now and the end of the year. Now, that's the first time we've heard anything like that. And so that's interesting, because now I'm seeing the Powell, the Fed president, chairman of the Fed, coming out and saying, they're not going to alter their policy. So I think there's probably some mixed votes coming out of the Fed right now.
Right. Sounds like it. Yep. Difference of opinion. Well, these are very strange times that we've been saying. It's just an immensely complex thing, Philip. I don't know how you guys stay on top of it.
And a lot of times there's no rhyme or reason for what we're seeing in the marketplace. I mean, we're seeing this morning, that the indexes bounced back off of yesterday and more than recovering. And right now we got the S&P 500 up a little over 1/3%, almost $16. We got the Dow up about 1/4%, up about $82. The Nasdaq's really bouncing, up 0.7%, up over $100 to the positive right now. So we're seeing things like that. Then we look at commodities; they're all doing well. Silver's up 1.2%, gold's up almost 1%. So those are doing well, but crude oil is heading down. It's still down. It's down about 1/3% right now, but it's still over $75 a barrel. It's at $75.05 a barrel right now, Scotty. And it just concerns me because it keeps floating higher and higher, which means eventually we're going to see that way over $3 a gallon in gas, which will start to affect other areas of our economy like travel again,
Right.
transportation cost. All those
Right.
things are, fuel dependent. And so it'll
Right. Which
start to cause some issues there.
which drives the prices of consumer goods up. Right. Costs more
That's
to get them to where they need to go. Yep.
absolutely, absolutely. And that's not good for you and me.
Right. All right. What else you got for us there, Philip?
That's really kind of covers the things that we have going on today. We'll have more and more earnings tomorrow as we head out. Yeah, we have pretty good earnings day today. Tomorrow it'll start to bounce. And of course, we'll have jobs tomorrow. First time unemployment claims will come out tomorrow. That's going to be an interesting number because they're expecting them to fall a little bit from last week. So
Okay.
we'll keep an eye on that. And some other pricing numbers are coming out also. So, hey, with that, let me just remind folks, Scotty, that there's only one thing that anybody can control within their portfolio, and that's how much risk they have. And what I've seen from the people I sit down with is that they don't really understand or know one what their risk number is, how much risk they should have in their portfolio, and then two, they don't know how much risk is in their portfolio. That's why we developed our financial X-ray. And to sit down with us to find out what that looks like for you, give us a call at 863-382-0037. Check out our website at statlerfinancial.com and then join us this weekend for the Statler Financial Radio Show, 6 a.m. and noon on Saturday, 10 a.m. Sunday morning on Highlands News Talk 730.
Super. Hey, have a great day. Thank you, Philip.
All right, buddy. Talk to you tomorrow.
All right, you betcha. It's Statler Financial Services in Sebring.
From the pitch.